Now, the new year didn't bring a slowdown in the collapsing price of oil, and oil is dragging down major currencies as well. This is a shock to the markets, but who gets to take advantage of it? Michael Lear from Athena Capital Advisors is here to break down what exactly is happening. Michael, welcome back to Arise Xchange. Good to see you.
Good to see you. Happy New Year.
I thought the markets were kind of used to with the idea that oil is going to trade lower, but today they got just clobbered across the board. What happened?
I don't necessarily think the two are related, because I don't know about you. I went to the gas station yesterday. Gas was $2, and I didn't say, "Oh, I've got to go out and sell stocks for my clients." the two aren't really tied together.
Okay.
So a little bit of what's happening is we had light volume last week. A lot of managers.
But you and I don't drive the market, though. It's traders that do, right?
Yeah, exactly. So they weren't in the market last week. They had some rebalancing to do. So just think about it broadly. If you have the 60-40 portfolio, you've got 60% equities. They were up 14% last year. Your bonds were up about 6%.
So this is just maybe cleaning house a little bit?
A little bit of house cleaning, a little bit of managing the decks. Energy is not that big a part of the S&P 500. It's a reasonable amount, but it wasn't what drove markets.
And what, at this point, is oil simply, we've used the phrase before, everyone uses the phrase a falling knife, which means you just don't know where it's going to end up.
Well, it's manipulated largely. So you have OPEC doing whatever they want to do and trying to flush people out of the system. So with that being the case, you kind of got to be wary of prices could be here for a while because people are going to keep producing.
Okay, so two questions regarding the euro. Why is the euro been now sliding for some time, and why is this important to Americans?
The euro's been sliding basically more recently over the concerns about Greece. They have an election coming up on January 25th, and there's concern that they might try and exit the European Union.
The Eurozone with the euro. But Greece is so inconsequential, isn't it?
It is and it isn't. I think it's as a larger factor, it really affects the way people think about it.
It's a perception.
It's really a perception.
That maybe this is the first exit out of the euro.
Yeah, and that could lead to others trying to exit and manage their own currencies.
Okay, and how does that impact us here, though, in the markets?
I think
because as the dollar gets stronger, and by the way, that is a big factor in the price of oil coming down, right? The dollar buys more, and it's a petro. We buy oil with petrodollars.
Exactly.
Okay.
So I think what you really want to concern yourself with is the broader aspects of things. So when you think about oil, you want to think about how's that affecting your portfolio. So it's going to affect negatively things like Nigeria, Russia, Venezuela, and it's going to have positive effects for those people who have to import. So you look at India and you say it's a boon for them. For us, it's
so depending
positive.
on which emerging market you're talking about, there's benefits and there's losses. Clearly, African nations are taking a hit here.
Yes. Yeah, so I think that's what you want to concern yourself with. And as far as the Eurozone, you want to concern yourself with the broader issues of where the growth is going to be. So when you have things that are decoupling from fundamentals, like you have Italy and Spain that are off 30 or 40% from their fundamental intrinsic value, those are kind of things you want to look at and opportunities you want to see in your portfolio.
Okay, so let's talk about those opportunities. What sectors do you like in 2015?
In 2015, it's kind of a mixed bag. Another funny story for you. I opened up Wall Street Journal today, and strategists were looking at an 8.2% rise for U.S. equities. In that same article, there was a graph that showed they had positive expectations for the market since 2000, every single year.
Okay, well, they have something vested interest in saying things are going to go up, and two, their track record is irrelevant, right?
So with that kind of perspective, we do expect a low to mid single-digit rise in U.S. markets just because we're a beacon of stability, and the rest of the world is experiencing a lot of macro issues.
But sectors-wise, do you think energy might at some point recover?
I would expect energy to recover. I don't know when that's going to be because obviously it's being largely manipulated right now,
that's a market that the everyday folks should not play in.
No, for the long term, yes. I mean, I bought oil for my kids, but I don't need that money for 18 years.
Okay. Michael Lear, thank you. Vice President, Portfolio Manager with Athena Capital Advisors. Always fun. Good to see you.
Good to see you.
Coming up, Tea Party members in Congress may have other plans for the House Speaker and what that might mean for business. Stay with us. You're watching Arise Xchange.